This is For Advisors by Advisors. I'm your host, Evan J. Mayer. Today we have a very special guest, Mr. Andres Pimentel. What's going on, Andres?
Everything's good. I've been looking forward to the famous applause that you do in the intro. So mission accomplished for me.
The signature applause. Andres is a financial advisor and he owns EC Wealth Management. You just went independent about, 2 years ago? Just short of 2 years.
2 years ago in August, it was in the midst of the pandemic that I decided to take this leap of faith, and I haven't looked back since.
Yeah, probably a really good time. I ended up doing mine right before, right during or at least, after June or July when the market kind of corrected back up. A really prime time to do it. So yeah, Andres is an independent financial advisor. He is affiliated with Kovac Securities, is his broker dealer. And prior to that, he was in the bank channel his entire career. And I thought what was interesting about interviewing you is that we came from very similar circumstances. Andres was a teller and a CSR at SunTrust, did that for about a year, and then joined two seasoned veterans as a junior advisor on their team, assistant/junior advisor on their team. And I in turn was a licensed personal banker at Bank Atlantic when I got started, probably about 5 years before you did. So not much earlier, but about 5 years earlier. And so I was really interested in talking to you and interviewing you and kind of learning about, I know you and we've hung 10, 20 times, but I don't know the extent of the background. So I thought that was pretty interesting to learn today. Tell us a little bit about you, how you got started in the business, what your thoughts were, and then where you are today.
Yeah, thank you. For me, it was always, I got into banking with the end result in mind of I wanted to be advising, and I wanted to be advising to international clients. My background is that my family's from Venezuela. Even though I was born here, I was raised there. And so I've seen a lot of the challenges that people from Latin America have when it comes to financial planning, long-term investing, and coming from a country where, and it's funny that we're talking about inflation here now being 6-7%. In Venezuela, it's 99%. Over there, investing is come December, usually there's a big devaluation of the currency. So everybody would be buying watches, refrigerators, real estate, hard assets that I guess when it doesn't lose the currency as fast as most. So for me, it was that. So I went into banking with the end result in mind. And I started that hybrid role where I was a teller and a customer service rep. So I would open up accounts, savings, checkings, and refer the investment piece to the local advisor. I did that for about a year and a half. And then after that, I got the opportunity to join two seasoned advisors at SunTrust Investment Services.
Where were you in the teller, the banking role? That was Tampa, you said?
Yes. So I started, at the time I was living in Tampa. So I started looking, I figured, hey, instead of going back to Miami where my family is, I'm going to apply at both areas, and then wherever I get the opportunity, that's where I stay.
And so the two advisors were Ron Teasdale and George Alvarez. And how did you know? Was there a position like on the internet, or how did you know they were looking for an advisor?
Correct. So yeah, SunTrust has their intranet. So the requirement is basically that you have to be at your current role for about a year, and then after that you can go and do different things within the bank. So after a year, I started looking, and I was looking at either joining directly the investment side or going into the international. SunTrust has an international division where they have like their private banking and the investment. So I doing that, and actually I interviewed with international first, and they wanted to then do a face-to-face meeting. And in between that process, I guess they had given somebody else the offer and they had accepted. So they're like, look, the offer is no longer available, but we really want to meet you in person, so that if something does come up in the future, we have you in mind. I did that, and then shortly after, the opportunity to interview with Ron and George came up. So I did that, and they gave me the opportunity. And for me, it was a blessing because it gave me that foot in the door into the business, and they were always very supportive of my development. And so was SunTrust.
What year did you start? What year did you start with them?
With them, I started in the summer of 07, licensed and ready to go. I'm starting to meet with clients, and 6 months, 9 months into this, everything that I'm advising is down, and I'm like, man, I don't know if this is going to be for me long term. I'm going to stick it out.
So that's awesome. So you initially started as like a sales assistant support role, but they wanted to develop you and you wanted to develop into a full-time advisor. Now, I had joined the bank in 12, and by that point, you were already with them for a few years at that point, 5 years or so, building up that book, but you were still in that junior capacity. You worked with two different advisors that both have completely different personalities. How did that work out, like over that 5-year period, and then even going past that?
For me, it was a learning curve. I like to think that I'm pretty adaptable. I'm really easygoing. And so they both had they still have very successful practices. They've been with SunTrust for 20 plus years each, and they both manage $1 million plus books of businesses. So when I came in, I remember, their styles are night and day, but I was able to learn from both of them. Because when you start dealing with different advisors, there's some things that you're going to like from one advisor and some things that you're going to like from another advisor. For me, they both have very strong work ethics, but the way they approach the advisory or their advisory practice is very different. I came in with that understanding that they wanted to groom a junior. They already had their assistant. And the first day I get into to work with them, I remember Ron prints out his book of business and just drops it in front of my desk. And he's like, all right, start calling everybody and introducing yourself. I started with that, thankfully, because they were both very established. Over the years, they had opened up some smaller accounts or either inherited them. So for me, it was a great training ground because it gave me the ability to meet with unlimited amounts of people that are in nature very conservative because you're coming from a bank channel. So it's not the fidelity approach where somebody that's talking to you, they know they're going to talk about investments. In the bank channel, it's how long can you have a conversation with a client before you drop the word investments. So for me, I got to learn a lot from them.
And you left in what, 17?
I left, it was 5 years ago, so 17. Yes, so it was summer of 17.
So you were with them for 10 years.
Yes.
Very long time. So did you see yourself when you're part of a team like that and you're kind of the junior by so extent, obviously you wanted to have your own voice. That eventually came, I'm guessing, at some point where you had to have a conversation with them and said, I want to be considered an equal here or something along those lines. When did that transpire?
I think it happened over the years. In the first few years, it was just sharpening my teeth, getting my education. I got my master's in finance. I got my CFP, CRPC. And then over the years, I think when it was like the same time that you started embracing financial planning, we started embracing because it was a big push from the bank. And the reality is that once we started adapting that approach, I just saw the floodgates of the clients just open. And we had a very good program with the e-money combined with Money Guide Pro. So I felt it was the best of both worlds. As I started embracing that, I felt that I had developed my own style and the people that I would advise. And so for me, it was coming to a point where it's great to be working with two different advisors, but as my style came to fruition, it was leaning more towards one, but it was just going to be impossible to break away and start with one if I wanted to long term, because there was a friendship in between them and they both invested in me. So it wasn't fair. So that's why when I got the opportunity to go on my own on what I felt was a good bank program, then I jumped on that so that I can start from scratch.
So yeah, just interested in that progression. I mean, you've obviously probably had that going in your head for a couple of years. Did you feel like you had to leave the bank and go to a different firm for you to fully break out on your own? And then when you did that, was there discussions with them when you left? Because like for me, when I left the bank, nobody can know, right? You literally have to go in the middle of the night. I'm guessing your circumstance was a little bit different. How did that all unplay?
Yeah, so for me, I looked at in the bank, it was going to be extremely hard for me to go on my own because it was literally starting from zero. A lot of the relationships that I had brought in that weren't bank related were international. And the problem with international, particularly in SunTrust, was that those relationships, we had to have them tied in with an international advisor. And therefore, we would split the revenue with them.
Bank advisor or no, international financial advisor, yes.
Right.
Like so Stephen, yeah. Yep.
So we had to have a joint rep code. I ran their relationship. I did 100% of the work. Anytime that there was any questions, they would just literally forward me the email and like, hey, Andres, can you handle this? And it was like, all right, if it was one account, no big deal. But it was becoming a mini book of business. And so for me, it was going to be very challenging to come to that bank with that opportunities. And also with SunTrust, and you mentioned it before, where the good advisors have the better. So for me to start from the bottom, SunTrust is a great program for a semi-established advisor. Like in order to survive there, you're basically not going to have to, you're not going to be able to start from scratch. You're going to have to either have a book or inherit a book. So for me, that was not on the table. This other opportunity just came about, just networking with some of the wholesalers, and they put me in contact, the hiring manager at Citi. And so I had the conversation with Ron and with George, and we felt that it was a good opportunity for me to go in that direction. And I was going to be able to take some of the relationships that I had developed. And so I wasn't starting from scratch. So I knew what I was getting myself into. And I said, okay, the opportunity was right. Based on what they had told me I would be, it seemed great. But I always was very conservative. And I said, okay, those things that they're promising you don't pan out, I can count on what I have. And I felt that I had enough to at least figure it out, have 3 years or so to figure it out. And again, I guess a part of me always, the end goal was to be independent. I always felt that, especially when you're doing financial planning, when you're advising and it's not based on performance, you really get to know the clients and they really get to know you. And so you are your own, and you're your strongest brand. So I felt that, if it didn't work out, where I went, I felt, hey, I should still have a book big enough to transition to independence and actually not have my income suffer. But I wanted to give that bank channel an opportunity before I went independent.
Yeah, and I think it's dry. I mean, it's definitely drying up. The walk-in traffic, that kind of thing, is all a thing of the past to some extent. And I'm not saying it's completely, the bank channel is completely dead. It'll always be there to some extent, but you also get past some of the politics of it all, right? And the parts you really want to get away with. And my guess is you don't have 18 conference calls lined up today, so you don't have to worry about it wasting some time. Let's hop into, so, by the way, huge congratulations, huge success. I remember when I joined SunTrust, I was like, who's this guy? This guy, I'd love to take him from his team. And I became friends with George, and I was like, all right, well, I guess I can't. George is too nice of a guy to try to, take you. I think I might have said a couple things to you occasionally, like, hey, if you ever get bored, you come talk to me. But it's awesome to see your transgression and now to owning your own firm and having your own clients. And it was probably the exact right decision to leave when you did, in the concept that you knew you would always be a junior if you stayed, or you'd have to recreate what you had there and then deal with revenue sharing and some of that BS that probably would have come up. There would have been, in my opinion, there probably would have been conflicts if you stayed to some extent, just trying to work your way around leaving a team. It's never easy. And so a clean break might have been the best thing for you. So talk to me about international business. For somebody that is in South Florida, I'm in Boca, where there is no international business. And when I say none, I'm sure there's advisors here, and I'm sure there's clients here that have international business. But compared to where you were down in Miami, which is like the international mecca, it's a very different business model and a very different clientele. What percentage of your book of business is international clients at this point?
As far as, I would say about 60%. But about 70% of my assets. It's different. It's different, and it's very much the same. There's just some things that you have to learn. There's estate taxes for international clients that they passed away and they have assets in the US. The threshold is very low. And so that's why a lot of times either they do trusts where the money can be invested here, but it's owned by them in an offshore corporation. So if they pass away, the corporation doesn't.
Got it.
So there's things like that. So there's some funds, there's some things that you have to learn. And one thing that it is in Miami and South Florida, there's plenty of opportunities to deal with international clients. And for a long time, I think a lot of advisors, and I can't say all of them because there's a lot that have embraced the financial planning, but a lot of them have a nature to being transactional. And especially that international clients, for the longest time, their parents bought bonds, and they bought bonds in the 70s and they bought bonds in the 80s. So now, they have this money, and they're like, my parents always bought bonds and they've always done great. And I'm like, that's great, but they were never in a zero rate environment. They were always in this decreasing rate environment that actually then makes the bond values go up. So, that they sign a WA because they don't reside here. So they're not subject to taxes in the US. So when they get a 5% coupon, it's a real 5%. And you're dealing with affluent clients that this isn't all of their money. They have their own businesses, they have real estate, so they're already diversified. they don't understand or have the same knowledge that a maybe a domestic client comes when it comes to equities and long-term investing. So for them, it's like, hey, the money's in, for them, it was like, the money's in dollars. That's mission accomplished. I don't want to lose this.
So there was two aspects. There was the aspects of inflation on their money and getting it out of that currency so that it's safe and it's here. But then there's also on the, I guess you got to look at three parameters: the taxation potential when it gets back to them, the investment growth potential, and then the currency situation. Obviously, in essence, you can't just open up a regular brokerage account and manage individual equities for them, because there could be potential estate tax issues. So using these offshore funds is almost, because I always wondered why international always had to use these offshore funds, and the whole purpose is so that when they receive the assets back at home, they don't, upon passing, that their estate doesn't get whacked.
Right, because it wasn't residing in the U.S. So these are offshore funds. So you have American funds that have just an offshore registration for a fund that mimics, so a balance fund or the whatever fund. So you can buy those that are registered offshore, and therefore, even though they're invested in U.S. equities, the registration happens outside the U.S.
So, stupid question. Let's just say you wanted to pick and choose 40 or 50 stocks for this international client. Are there funds out there that will? It's a stupid question because I know there's no mutual funds that will go ahead and just take my stock recommendations. But given that it would be able to be funded as an offshore fund for that client, are there companies that would do that?
I think that the easiest thing is for someone that has the net worth, it's better off, they can open up an offshore an offshore company, and then we invest inside of that. So it's a business account in essence, where you're buying at that point you can buy individual stocks, and it's not going to be subject to estate taxes because it's the entity that owns it and not
that
owns it.
Just the workaround. You get them to.
Yeah, there's still some things such as like dividends. You're still, with dividends, even though you sign a W-8, you're still probably going to be subject to withholding, and it's very difficult to see that money. Dealing with individual stocks for international clients, not the cleanest thing.
I'm guessing if you're big enough, if you had $1 billion book of business and you would just create your own offshore fund, is basically what the advisor would do once you have enough assets.
Right, you could do that. And nowadays they also have, they have offshore ETFs. So I mean, that world is growing, maybe not as fast as the domestic side, but also there's pros and cons to each type of clientele. And it's like, well, when I decided to leave Citi, I had to look for a broker dealer that was comfortable opening accounts for international. So it wasn't just like, hey, this whole world opens up. It's maybe these X amount of broker dealer are on the table for you to interview, or for them to interview, or vice versa. And also, so, you're limited in that sense. But the benefit also is that clients can't simply walk into a Fidelity and say, hey, I want to buy my own stocks. It's very difficult for them. So once they find an advisor that they can work with in a system that works, then they're more susceptible to referring their friends, because they know that it's a very hard world to deal and navigate through.
And then obviously, by you wanting to do planning and get to know the clients and not use them as a transactional basis, you can become really big in the space, because first of all, when we look at the average financial advisor, how many of them are actually doing planning for their clients on a legitimate reason to understand their situation and help them? And then the question, in your specific side of the industry, which is the international markets, it's probably even a lesser percentage. So it gives you a big step up in the game.
Yeah. You have to educate the client. The client is just not used to it. For them, it's just that language. So you're going to call me when it's time to sell, and we're going to talk more about your need, and I'm going to call you. It's when your needs change is going to be the primary driver as to when we're going to make changes in the portfolio. And not because rates went from 0 to 3. Granted, it would have been nicer if it would have been a smoother, slower, steadier ride than what this is. This actually creates other opportunity, but that don't have to do with financial planning. It's just some clients that are very conservative and they've been sitting on tons of cash, earning them zero. Now it's like, hey, how about we can buy you some short-term paper that's completely, very safe, government treasuries. And
I know, how great is it? It's been years, but you can literally go on to your bond trader or whatever bond software you have, and hey, I want to buy a 6-month bond paying 4.5%. That's A rated. I mean, you weren't able to do that pretty much our entire career. To be able to do that is is such a cool part of now the business. And it's funny because most of the banks have not caught up with the rates. They're raising their rates, but not really. Like, I bank at Chase and the rates are abysmal. It's almost like they don't want your deposits to some extent. But I do get a call about once a month from the private client advisor group over there that's like, hey, you should invest. I'm like, I'm an advisor myself, so I don't think so. So just hopping back into the bank, you cut your bones there. What are parts that you miss? Like, you're independent now, you own your own business. And that's the big thing I've been doing, since I started this podcast and I speak to, people, they go, what's the number one reason you should go independent? It's, well, that I want to own my business. Well, yeah, no, I think there's multitude of different things. I think the business end of it is really not that difficult. For you to create EC Wealth probably took a matter of 3 or 4 hours of hard work. But other than that, I mean, that part of the business is functional. What parts do you miss from the bank channel?
For me, honestly, I do miss that environment. We talk about the bad things about the meetings, right? And there were tons of useless ones that we had to endure. But then there were the positive ones. I did enjoy the face-to-face meetings because we would get a chance to interact, because you're in Boca, you're in your world, I'm in Miami, I'm in my world. And it's, even though we work for the same program, we don't get to see each other on a weekly basis. So I miss that camaraderie that you would have. Like, I'm still close with, say, George at SunTrust. He's like a family member to me. And at Citi, the advisors that were left in the branch, I still talk to them. And it kind of sucked because, they kind of put you at odds with it, because in the, at Citi, it's like, I went into a branch where there should have been maybe a couple of advisors, and they pack them in. Here's 4, go figure it out. And it's kind of hard because we're all vying for the same opportunities. And in my opinion, there just wasn't enough for it to continue to grow. And they had been in the bank. The other 3 had been in the bank double-digit years, 2 of them, and the other one was a banker that was number 1 banker in the program. Fantastic individual, and so I still stay in contact with them. So I miss hanging out with them, because the day-to-day of hanging out and exchanging ideas, that exchanging ideas. I mean, here I read a lot and I try to stay up to date and call my colleagues. So I call George and I call other people and just bounce scenarios. Hey, I have this prospect. This is what we're discussing. This is what I have in mind. What do you think? Because that's a lot of what we would do in the bank. And I really enjoyed that. To me, if George ever decided to go independent, like, I would love to work with George, just because in our industry and in life, like, I love what I do. And we spend so much time of our day involved in what we do with that. And if you get to like them and if you respect them, like that, we work, but it doesn't feel like that. So for me, I miss just being able to talk to other advisors. But then the drawback is I had a lot of windshield time, because I would drive an hour to and an hour from work. And I did that for years. And now I have kids. And that time was impacting my, the time I would get to spend with my kids. My wife, I met her at the bank. She used to be a banker as well. She left. She became an attorney. And she went on her own as well 2 months after I went on my own. And that wasn't planned. And I'm like, can you give me a little bit more of a time frame so I can bring in more assets? We work together, and we work together at the bank, so we're used to working together. But that's one of the things that I missed, that meeting new people, engaging with your coworkers, and that's really it.
Yeah, the camaraderie was always great. The drinks afterward were probably the real reason to attend. The problem is that to get those things paid for, they would jam pack wholesalers in, and you would have 3 or 4 wholesalers coming up there to speak, to sell whatever product they had to sell. And you were like, all right, that's 3 or 4 hours wasted. And then I always make a joke to this, with other advisors, but like, you always have the manager that would come in that would talk about the team goals, and you'd go, we're advisors. Like, we care about our goals and our clients' goals. Yeah, we want the team to do well, but do we really need to know an hour about if how you're doing as a manager to keep your job? Like, when we really are only utilizing you to help benefit our clients and our practices. And there was all that political side of things, I guess, to some extent. And not that we didn't have great managers, because we had some great managers, and we had some bad ones too that eventually drifted out, right? So yeah, go ahead.
I was just gonna say, and you saw it, that they were, and you've alluded to it, where like there would be a shift in management every year or 2, and it was when we had a very good manager, then it was great. And you also mentioned you interviewed Lucchini, who thankfully was with us for your tenure and mine. So we always felt like we had somebody on our side because sometimes there were bank managers that they were pushing the bank's agenda. And so this is what's really great for the client. And you're like, no, not every single client needs a whole life policy, and that doesn't need to be positioned as an investment. But there are scenarios, but it's not 80% of the people. It was nice to at least know that we did have, some people on our side that understood our world and that they did support us. Overall, SunTrust, to me, it was great because it gave me everything and it helped me become the person that I am today. Where it's hard to break into our industry and it's hard to get past a certain threshold. Once you get past a certain threshold and you have a certain amount of assets and revenues, and you can breathe. And now it's okay. Now I can think of longevity, because I don't know the stats, but I think it's 20% of the advisors survive their first 5 years.
Yeah, no, I want to say through the 3 years, there was a stat like 85% of people that get registered are out of the business in 3 years. It's pretty insane that it works that way. And yeah, I give all the credit to SunTrust in the world. And I think they were a great bank organization. I don't know how, they're different now. I mean, and from what I'm hearing from other advisors that are still there, it's not the same as it was when we left. So we probably left at a good time. I think you left a couple years earlier than I did. But yeah, it was a great time and a great way to learn a lot about the business. Now that you're independent, you start EC Wealth. By the way, what's EC stand for?
So EC, it's a dual play on the name. So if you go to my website, you'll see there's a big mountain called El Capitan, and it's in Yosemite Park, and if I remember correctly. And so the logo of my business is a mountain, and then you see the path towards the top where the flag is. So the whole thing is you can climb a mountain on your own, like you can invest on your own, and it doesn't mean you're not going to succeed. But if you don't have someone to help you plan, chances are you won't succeed. But if you do succeed, you might spend a lot of time going the wrong ways. So for me, it was that, and it was also in a way to honor my grandpa, we called him El Capitan because he was a captain in the Venezuelan military back in the 40s and the 50s. And so for me, it was a way to honor him because I had to respect all my family, but especially the things that he instilled in my uncles and my aunts. So my aunts. So for me, it was more like honoring him and also using the mountain as a metaphor for financial planning.
Very cool. And when you went independent, you created your name and you were looking for broker dealers out there that would support the international clientele. Obviously, that was 60% of the business. So something that you had to look for. Of all the firms that you looked at, what stood out by Kovac? And I think you had mentioned you looked at Raymond James. I don't know actually who you looked at, but I think you had mentioned that maybe.
Yes, so I did. I spoke to a couple of different broker dealers that are smaller. I listened to Mindy Diamond before going independent, and she does a good job talking about the different programs that are out there. But also, I interviewed with Kovac. I did a lot of research into Ray J. And to me, it was I wanted to either be Ray J or Kovac. Kovac is a regional broker dealer in South Florida. And so I went to meet with them. And honestly, it's just the way that they've treated me from prospect to today, it's been amazing. I can only say great things about them. They've been completely supportive. Questions that they ask make sense. The forms that they provide you, some people that don't come from a bank channel are like, man, they kind of do all these things. And I'm like, brother, you don't come from a bank channel where, it's bank forms first. And the last thing is whatever you actually need. So for me, it's just been that it felt right talking to them. And the support. Ray J, now that I've relocated, I'm in the Tampa area and they're headquartered here. And maybe long term, it would have made a lot more sense. But I have zero regrets with Kovac and I'm happy where I am. And that's how I went into them. Kovac at the time was launching an international division. There's another one, Insignia, that does a lot of international business. But for me, it was that. It was just, it felt right.
It was a good fit.
Yeah, exactly.
Yeah, and the good news about being independent is that down the road, year 2, 3, down the road, if there's a better platform, there's a better platform. That's the good news. You can always go where you think is best suited. I think, it's funny. Myself, I'm very happy with where I went and don't wish it's my next home for 20 or 30 years. But we're seeing some things change specifically on the laws regarding 1099 contractors, which, me and you were talking about earlier this morning with, some new rules that were passed. And, the question, if we're going to still be able to be compensated as 1099, are they going to have to wrap a W-2 waiver under us, or how's that all going to work? So it'll be interesting to see, because that could really impact our businesses, and we'll kind of see where that takes us.
Right. Yeah, we don't like having the boat rock, especially in the things that they're invisible to the clients. So for me, across that bridge, when it gets, the rules change, then I'll reanalyze at that point. But this was a pretty open architecture. The softwares that I wanted to use, the custodians that the clients are accustomed to seeing. So I wanted to make it the least amount of friction as possible. I think that was another big thing, that when I was at Citi, they cleared through Pershing, and COVAC gives you the option. They give you, they give you NFS or IWS, which is either Fidelity or Pershing, or they give you, I want to say another one, I don't know if it's like Ameritrade. So they allow you to work, and I work with multiple custodians.
That's important, isn't it?
Well, it is, because it's trust. And so leaving, when I left Citi has a very strong brand recognition. And so I have to overcome that. And I'm just like, look, you get your statements, it says Pershing, the statements are going to look 90% the same, because theirs has their logo, mine's going to have my logo. But it's you can call the same number if you ever want to verify your assets. And I'm just the advisor telling you what I feel is best for your situation, but you can always check. And so Fidelity for the domestic side has been great, because it's just, I tell the client, look, go to the Fidelity website, register, it'll be there, versus, me having to reset a password. And
now, are you using NFS, like the same software that we used at SunTrust for Fidelity?
No, because I use that. When I use them, I use IWS, which is kind of like the RIA, all fee-based. I use InvestNet to be able to place the trades and all that. And the client uses the Fidelity portal. So it's very clean on the
cleaner. That was important to me. There was a couple firms that we were looking at before we affiliated, and NFS was the paperwork was such a mess for clients, and the software was so now I look back at it and I'm like, I don't know how I got through it. It's been so much easier So the firm you affiliate with is such an important factor in those decisions. So what would be some advice you would give? Look, you were a teller, and then an assistant, and then a junior advisor, and then went on your own and the bank channel, and then now an independent advisor. We have a lot of young people that want to get in this business, kind of to see the numbers that are coming through. And then you also hear the same stats, which is like, the average advisor is 62 years old, and, that portion of the industry is leaving. I interviewed Chris Jeppesen 2 weeks ago, and he mentioned that I think 44% of clients say they're going to leave their financial advisor in the next 18 months. What would be some key pieces of advice for junior advisors or younger advisors that are wanting to get in the business?
I would say you have to look at this as a career. If you want to improve the probability of success, you got to look at it long term, it's exactly what I did. When I partnered up with Ron and with George, I looked at it as a career. There were times where, I could have probably gotten more money had I jumped ship and done something different. And there were times where I felt like, hey, this is working out great. So I would say look at it as a career. It's an industry that is hard to get into. And you just got to get your foot in the door so you can get experience. Don't be afraid of going into the bank channel. Is hard to break into as a young advisor, because today, the way you mentioned your foot traffic going down, the referrals, the way that they're being, it's going to be hard to get an opportunity if you don't have an existing book of business. So unless you can find a team to partner up with, I guess you got to pay your dues somehow. So it's find a way to pay your dues and get your licenses, whether it's through that or through a Fidelity program. It's like you're going to be exposed to clientele. And if you're young, there's going to be a point in time where a lot of advisors are going to be retiring. And if you network and you know people like Evan, you know a ton of people, and you know a lot about the industry. So have people, like Evan, that you can always use as a sounding board and say, hey, this is my situation. I'm sure we all advisors love to talk about our experiences and help. I think that's one of the great things about our industry, that I feel that there's enough fish for everybody to eat. I think it's great that you're doing great. I don't want Evan's clients. I want to be able to find the client that doesn't have an advisor, or one that's not getting the right advice or the right level of service for what they're paying. So for me, it's, hey, pay your dues, get your licenses. If you got to go into a Fidelity or Schwab program, go into a Fidelity or a Schwab program, go into a team, and you're going to be able to gain experience. And with time, I think the right doors will open up for you. But there's nothing wrong with doing a career even in an institution like that, because there are plenty of gigs. It's just in Florida, everybody that you talk to, a lot of people that are young and they're like, hey, I want to be a financial planner. And it's like, bro, even the bank channel might have one financial planner for 15 advisors. And it's ultimately a sales position. So you have to learn to sell yourself. You have to sell what you believe is the right type of thing. You shouldn't be ashamed of that. Like, financial planning, I believe, is the right thing to do. And I do believe that fee or AUM, it's not the perfect model, but it's a darn good model. Whatever, there's people that do it hourly, there's people that work commission. And it's just, look, as long as you're giving the right type of, but longevity is going to be great, because over the time, and I would tell George a few years ago, and I'm like, George, you're 40, I'm in my 30s. Now I'm 41 and he's in his late 40s, but I'm like, our whole career's ahead of us, and you're already a very well-established advisor. I'm happy where I am, my age. And for me, there's other things. You help my wife. I want to spend time with my kids. So it's not all about, hey, I'm going to kill myself to have the most assets under management, because that's not what satisfies me. For me, it's I want to be the best advisors for the clients that hire me, but I also want to have that flexibility where I can dedicate time to my kids, dedicate time to my wife, and have her flourish her business, because at the end of the day, thankfully, she has a very good practice as well. In order for both of us to succeed, we have to work together.
Yeah. And I think you bring up some very good points. Number one, just hopping, younger advisors just taking a job at Fidelity or somewhere just to get your licenses and get your experience talking to clients and working through is something I would never have told another advisor to do 10 years ago when the bank channel did exist the way it existed, since it doesn't. And I do think that newer advisors coming into the bank channel, it's a disaster. It's not probably, number one, you're not going to be supported in the same way. And two, the well-established advisors are taking the better branches and better offices. And I've just seen it in the SunTrust situation where juniors tend to go there and leave pretty quickly. You were there for a very long time, longer than anybody else in that part of the program. So they end up getting used a lot, and you didn't. You ended up saying, I'm going to learn from the best and try to take the knowledge from two different advisors and make it into a situation where I will be better for my clients because I was with two advisors. And so I give you tremendous kudos, but it's not easy to do, not an easy role to take, and a role where you almost have to be big alpha to do it. And then the second thing you said, which is something that I would never have said and now is important to me, which is spending time with my kids and doing that kind of thing. And when I say never said, I was in so much my own headspace as far as being the best I could be at this career, that I spent so much time and energy focused on what other advisors were doing wrong that I could outbeat them at. And then you get to that level of assets or size or wherever, where you go, I'm comfortable here. Like, yeah, if I had $1 billion under management, would that be better? It depends. Would that mean that I'd have zero time with my kids? Then maybe no. And so my mindset's shifted pretty dramatically over the last year, in the same thought pattern that I want my relationships to be strong and good and enjoy coming in on a day in and day out basis. So give you a lot of credit for both those things, because I think that's huge. And I ask this question a lot at the end of the podcast. It's kind of how the podcast is coming to an end. But what would be one thing or two things that you think would be great for the audience that, if you were thinking back on what we spoke about and you go, I really wanted to touch base on that and maybe I forgot. Is there anything there?
Before I answer that, I do want to also thank you. I think you've done an impressive job with your podcast. I've listened to all of the episodes that have come out, and I just know that everything that you've done, you're always striving to be the best at. And so I know that the quality was, if it wasn't there on day one, it was going to be there soon enough. But it's been surprisingly exceeding my expectations from day one. You've done a fantastic job. And I thank you for that, because like you said, this is a podcast for advisors, and you've interviewed such a diverse amount of people from different angles of the business. And I think that for your audience, that's great, because they realize that there are so many different paths that you can take. So I commend you for that, and I thank you for that. And as far as to answer your question, the advice I would give them, I think part of the main reason, or a good reason why I did leave SunTrust, was because of that. Because as far as flexibility, for me, flexibility has always been important. Life happens, and so work is, at sometimes we feel it's the most important thing, but I think family is. I mean, there's the time when your kids grow, you can't get that time back. Granted, when you realize it, you have the rest of your life ahead so that you can take advantage of that. But for me, I felt that in the circumstance that I was in, being a junior, I was going to be always handcuffed to not be given that opportunity when I needed it. And for me, it was like, look, I have these kids, I brought them into the world, and if my clients understand that I'm available for them, but I'm also doing some of the things that I need to do for me, then that's the type of client that I want. And at the time, I'm like, if that's the boss understands, then that's the type of boss that I want. And if they don't, then it's only a matter of time before we bump heads and I end up getting fired, because I'm not going to compromise on what's truly important. So that was another reason why I felt like I had to go independent, whether it's in the bank channel or my own. But as far as advice, so I would just say, look at your life, your profession as a career, invest in it. And you've done it, I've done it. You got your CFP while you were in SunTrust, so that I got my master. I continue to learn. One of the people that you interviewed, they talked about they became an enrolled agent. And I'm like, hey, what's that? And it piqued my curiosity. So now that's my challenge. I'm like, I want to go ahead and accomplish that, because I want to know enough, not to do people's taxes, but I want to know enough to know when to send them the right direction. And we know some of that CFP when you have the designation, but it doesn't hurt to get better. So my advice is, hey, look at your passion or this as a career. Don't be afraid to take chances. Again, there's so many different paths to success in this industry that it doesn't have to be necessarily what you set out to accomplish, but you'll find your way. But only if you're willing to take chances. If not, then you're going to be that assistant that says, hey, I want to be an Evan, or I want to be a George or an Andres. But it's like, if you're always afraid to take that step, then you're going to have to learn to just be the best assistant that you can be. So don't be afraid to take chances is what I want to, I guess, the message I want to,
I think it's a great message, and I think it's something you've done. So, you could speak to it. And yeah, that accounting designation, like I said, I try to pull some piece of knowledge from every show, and I try to learn from whoever I'm speaking to. And today I learned a lot, specifically on the international business side, which I didn't know. Thank you for that. And if anybody ever has any questions for you as another advisor, just another connection out here, Andres, how do they get a hold of you?
Yeah, and I'd be happy to speak to them. They can go to my website, which is ecwealthmanagement.com, or they can look me up on LinkedIn. They can contact you, or they can email me. My email is Andres, ANDRES, @ecwealthmanagement.com.
Fantastic. It was great to have you on. It was great to catch up. For those of you that are enjoying the podcast, like I said, please go ahead and subscribe. Like it, leave some comments. It does add us into the algorithm. It gets us ahead of some of the other podcasts that are out there that are not per se for financial advisors. And the more people that are listening and enjoying, the more excited I get about it as well. Look forward to seeing you on the next one.